Hello, I'm Dominic Hobson. My guest today is Stephan Wolf, CEO of the Global Legal Identifier Foundation, GLEIF. It's a not-for-profit based in Switzerland, founded by the G20 and the Financial Stability Board in the aftermath of the great financial crisis of 2007-8. Our subject today is LEIs and digital identities for corporates. Hello, Stephan. Thank you for joining us.
Hi, Dominic, and thank you for having me here.
Now, the original mission of GLEIF was to make it easier for banks and corporates to identify which part of an organization was their counterpart, which part they were dealing with. The financial crisis having exposed a great deal of uncertainty about who the counterparts actually were, and that had become a major source of risk and therefore of systemic risk inside the financial system. How successful has GLEIF been in fulfilling that original mission?
It was actually quite astonishing to see back then in 2008 that there was so little information available at the appropriate speed in order to assess your risks, your counterparty risks, and everything else. And when Lehman collapsed, they had lots of derivative contracts with other counterparties out there, and all of these derivative contracts were insured by big insurance companies. And that is how the domino effect would have, kicked in. And that was the reason why ultimately the governments bailed the banks out, right, in order to overcome an immediate issue. But at the same time, the governments, the G20 in particular, said this is not going to happen again. And they mandated the FSB to think about all the ways we could circumvent a systemic society in principle. And one of the major, initiatives that came out of this was a global registry for what we call legal entities. Legal entities more than just a corporate. We're not just talking about limited liability companies, but we're talking about basically every legal person that can engage in financial transactions. And financial transactions are also very broadly defined. It could include, for instance, payment messages. And since we all have a bank account, all corporates have a bank account, it will basically cover everyone. But the focus was on derivatives and to make sure that the regulators and agencies understand the bank's risks. And there were already in the early years laws being put out, like the Dodd-Frank in the United States or the EMIR regulation in Europe, that had one major aspect that counterparties of derivatives transactions must have an LEI, and the banks must report with these LEIs. And I think we can check the box. We have now regulation all around the world, Asia, Europe, America, for the derivative side. So I think that we as citizens can sleep better now. The risk coming out of that area is better under control. Let me put it this way.
As you say, it's a massive task to encompass every individual, every legal personality that had ever engaged in a financial transaction. Are you able to measure what proportion of transactions or what proportion of potential LEI holders you've been able to reach?
First of all, the current state is, after the past 8 years, the first LEIs were issued, that the eligibility of entities were defined by policy. And national competent authorities transform or translate these policies into national law or regulation. And that manifests the need for having an LEI. So I was talking about the derivative sector. This was the first one, but it didn't stop there. In Europe, for instance, we have the MiFIR regulation, where basically every issuer of a financial instrument traded in Europe or counterparties of those trades must have an LEI. We have now regulation in India about credit borrowers who need to have an LEI, and regulation in other countries like China, where even import-export declaration for customs purposes for some countries must have an LEI. So you see, it's spreading out. But we as GLEIF do not know the use cases. The LEI, as it is, as a registry, is use case agnostic. It is just for the viewers here, it's a dumb 20-digit number with absolutely no semantics. It's just a string, but it's associated with core reference data, as we call it, like legal name, legal address, headquarters address, and a few other data elements, including the owners. of the company if the owners themselves are legal entities and if they fully consolidate the subsidiary in their books.
I probably should have checked this on your website before we spoke, but is it possible to state how many LEIs have been issued now?
Oh yes, we have an open index, the only open index as far as I know in the world. We talk about over 1.7 million LEIs at the moment and rising. We have an annual growth rate of like 15% at the moment. And we see also more and more regulation coming in. What's very interesting for us to see is that now more and more people talk about voluntary adoption. So they see the value of the LEI even beyond regulatory reporting requirements. And that is a trend that we also want to support very heavily.
Right. Now, there's an obvious overlap, a kind of duplication of work between the verification authentication process you have to go through to issue an LEI as a unique identifier, and the process you would go through to issue an individual or a corporation with a digital identity. Are LEIs now evolving into a corporate digital identity because of that overlap?
You raise a very good question. We see a lot of overlap. And let me state the very obvious thing. The background check that you have to do on a corporate to understand really if they claim that they really are who they claim to be is something that takes place at multiple places. And two places are the LEI issuance process and the digital certificate issuance process. So you have providers, certificate authorities usually doing the exact same background checks. We did a research project a few years ago with Fraunhofer Institute, and they came up with an overlap of almost over 95% of the exact same activities. And that is why we came to the conclusion that putting both together would make a perfect sense, right? The idea is as follows. A digital identity is granted to an organization, but the information is embedded in the digital certificate. That means at the moment when something changes in the outside world, maybe the company changes its name or location, whatever, the information in the digital certificate becomes outdated. Usually you must revoke that certificate and issue a new one, but that doesn't always happen to take place. So there's a risk by using digital certificates that the information within the digital certificate might be outdated. Or you have multiple certificates from multiple providers and they have slight nuances in the data in there. By putting the LEI into a digital certificate, you would overcome these issues because the LEI always points to the reference data that is publicly available. And I'm very happy to tell you that just this year, ISO released the standard, the International Organization for Standards, released a standard on how to include the LEI in digital certificates following the X509 standard. And we're now in the process of reaching out to the certificate authorities and trusted service providers around the world to make them aware of that and to help them to perform this embedding.
And who is in that process you've described, who is responsible for ensuring that the digital certificate, the LEI, is kept up to date? Is it the holder or is it the regulator who's meant to keep an eye on that?
Very many back then thought about these issues, and the result was that it was designed as a self-registration system. It means that the individual legal entity that wishes to have an LEI applies for an LEI with an LEI issuance organization. And the LEI issuing organization would then do all the background checks. They would take the data from the registrant, compare it with authoritative sources and other things. And then in the end, they would grant an LEI that the company then could use. The registrant is obliged to come back to the system with any change that might occur. So there is a duty for the registrant to go back to the system and to update the data. But let's face it, not always people are so keen to doing that or forget about it or things like that. So the LEI issuance organization has also a duty, at least by the end of the year, to go back to the registrant and ask for updates and ask for any changes. If for whatever reason a registrant objects against that or doesn't want to update its data, we would still carry the data, but we would indicate with a certain status flag that this registrant has not come back to the system. So if you use the data, you have to do more on your own checks, right? And in this way, we have a very transparent way of doing that.
And are you finding evidence that that incentivizes holders of LEIs to update them because they find there is a disadvantage if they don't keep their information up to date? Counterparties stop dealing with them, for example.
On our website, you will find not just the data itself. You can search like with a search engine and things like that, but you would also find statistics on that. And it is quite amazing to see that the willingness to come back to the system and update the data is different from jurisdiction to jurisdiction. It's very fascinating to see that, for instance, in Japan, with, I don't know, 10,000s of LEIs there, the update rate in Japan is over 95%, even though there is no local regulation requiring it. So the Japanese organizations do this freely in order to have their international passport. We call the LEI also like an international passport for trade. They want to keep that information up to date to help their counterparties in other countries to deal with them in a much easier way.
Well, that's an interesting finding. We've done a lot of work on digital identities at Future of Finance and have reached the conclusion that it is up to the holder to maintain the identity and keep it up to date. Now, I'm getting a little confused about digital certificates and LEIs here, but it seems clear that corporate entities, the type of organizations which are taking out LEIs, could obviously benefit from having a single digital identity in exactly the same way as an individual could benefit from a single digital identity. So could you just unpack a little bit for us where LEIs fit in as a link between digital identities, or as the foundation for digital identities, or is there some other arrangement, some other link between LEIs and digital identities? What's really going on between digital identities and LEIs? Could you explain that to us?
Let me try to explain this without using too many technical terms and acronyms and things like that. But you raise a very good question, and I would think that people think about this. Computer, everything is digital already for people, right? Excuse me. Now, the reality is that identity manifests itself in certain attributes. Let's take you as an example. Your height, your hair color, your eye color, and a few other biometrics. Your name, the marriage status you're in, and so on and so forth. All of these attributes that in the end constitutes your identity can be put into a database, right? And this database needs a database key, and that is the LEI. The LEI is a logical key that connects to all the attributes and all the values and everything else. Well, in case of a legal entity, it's not the hair color and not the eye color, but equivalent or attributes that describe, for instance, the location of the organization. That is the reference data that describes the identity, and the LEI is the pointer to that reference data. But that doesn't manifest a digital identity, because a digital identity is used for authentication of the presenter of the information. So Dominic, you could present an LEI to me and you could claim this is your LEI, and I would not know. I would need to check against the databases, and I would need to do my lookups again to see, Dominic Hobson is entitled to present me the LEI on behalf of his firm. Yeah. Now, think of the next step. You obtain a digital certificate for yourself, and the LEI is embedded in that digital certificate. That means you are the owner of the private key of this digital certificate. That means wherever you present your identity now, your digital identity now, people can trust that the information that is embedded in this certificate is really connected to you as the owner of the private key. And that creates the link between you and the digital certificate. And please never give your private key to somebody else, because you would give your identity to somebody else, right? This is logical step there. And that means people can authenticate you in, for instance, an onboarding transaction or in a financial transaction. And this is why the LEI makes sense in the certificate, because you can take the certificate information to have the authentication piece done, but then you take the LEI out of the certificate to connect back to the reference data in its latest version. So it's a combination of both. The LEI is embedded in digital identity. It doesn't replace it, and neither does digital identity replace the LEI. It's actually a fusion of both that makes sense.
I see. That's very clear. The LEI is like a means of confirming that the attributes which lie behind the digital identity are genuine, are authentic. That's very clear. Now, corporates could obviously benefit from that, and so can individuals. Now, knowing the legal entity you're dealing with is one useful thing. But in the case of corporates, you also have to know whether the individual officer of that corporate entity is entitled to commit that corporation. Now, I know you've been doing some work with Evanim on that problem. Does that solve that problem, or are you tackling that issue by other means? You know, is this person entitled to commit this company to this transaction? How is that problem solved?
Now you find me excited about this question, because that's exactly what we have discussed over the last years. Digital identity with digital certificates is a proven way of doing certain types of transactions and authentication and so on and so forth. They come with a few weaknesses, but by and large, it's a matured industry and it's widely used. Just think of the internet. Everybody who goes shopping on the internet uses digital certificates on the other side, because the server on the other side identifies itself using its certificate. So that's a pretty matured world. But there are a few shortcomings. I mentioned the revocation is an issue. It's not always clear if this is done correctly. The information within the certificate can be outdated, so it's better not to put it in the first place. And now this is the important thing, there is something missing that we call a role of an individual. So let me take me as an example. There is the GLEIF organization, the Global Legal Entity Identifier Foundation, registered in the Swiss Registration Authority. In that register, you will find an entry that Stephan Wolf has signing authority on behalf of GLEIF. So it is a combination of the company, GLEIF, and Wolf in capacity CEO, in the role of being a CEO. So you need that triplet. You need the company, you need the individual, but you need also the roles. And I'm very happy and excited to tell you that ISO is currently taking up the work of creating a role standard for all jurisdictions, which is absolutely necessary to do that. Now, once you have the roles defined, you can associate attributes with these roles, for instance, signatory powers. And now these kind of things can change very quickly. People hire others, they leave companies and so on and so forth. So digital certificates with 1 or 2 years long lifespan might not be the appropriate tool for that. But there's a new standard emerging. It's infancy, I must admit, but it's really exciting. That's from the W3C, from the World Wide Web Consortium, the verifiable credentials standard. A verifiable credential basically means that you have any credential, the LEI could be a credential, and you turn this into a verifiable credential through cryptographic means. So how does it work? Dominic, you have your mobile phone, and on your mobile phone, you have a wallet software, and in that wallet, you have all kinds of credentials. Let's say you have the LEI in there. And now you present the LEI to somebody else in a peer-to-peer fashion. Now, the receiver of that would like to understand if your LEI is verified and valid. And that's what they do in verifiable credentials. They would then look to the issuer of the verifiable credential that you have in your wallet and can trace the entire trust chain to see whether your LEI was issued by the appropriate organization, and if that appropriate organization has the right to do that from GLEIF. And this hierarchical trust chain around verifiable credentials, that is something what GLEIF is going to develop on a global scale now. And we want to make this part of the global infrastructure for trade, for payments and everything else. A very big project, I know, but GLEIF is LEI is the only standard that would be suited for that on a global scale.
And the work you were doing with Evanim, what was that about?
Well, this is all new, right? This originates from the blockchain discussions we had. I had my first encounter with blockchain like in 2015, and I was always struggling with the fact how we could utilize that. But everybody was talking so greatly about it. But we figured that we have an authoritative system. We don't need a consensus mechanism. We don't need smart contracts. We don't need all of that. We need cryptography, okay, but with the verifiable credentials in 2018, the first time it made sense to have a verifiable credential that could be used in blockchain applications, but also beyond blockchain. And in order to test our hypothesis, we ran 5 different proof of concepts. We had 3 on the Hyperledger side with Hyperledger Fabric, Hyperledger Aries, and Hyperledger Indy. These are technical, terms for certain libraries that have been developed there. And we did the same thing on the Ethereum side with two POCs there. And those POCs were presented in 2019, and the last one is just released yesterday. And that gave us the good feeling that the approach that we have chosen with verifiable credentials is doable, is affordable, and is also satisfying business demand. We have now an outreach from so many networks around the world who would have never heard about the LEI before, but when they heard about this, they said, this is exactly what we need. And that spans areas like healthcare, like supply chain, like telecoms. All of a sudden, the LEI becomes a reality and a tool of choice for those industry on a voluntary basis. And the verifiable credentials piece of that, what we call the VLEI, the verifiable LEI, enables that.
You talked a few minutes ago about the synergies between the identification processes which banks go through when they're onboarding a client or updating a client's credentials for KYC, AML, CFT sanctions screening purposes. Now you've taken those synergies now, and you've reached this arrangement initially with JP Morgan Chase about using that process actually to validate corporate entities as with LEIs. In other words, the issuer can go to the issuer of the LEI and say, well, the banks run the checks. We are who we say we are. Please give us an LEI. Now, did you do that because you thought that was a way of increasing this 15% per year growth in LEI issuance and adoption, or is this part of a much larger program which we've touched upon repeatedly in this conversation of where LEI meets digital identity?
We discussed this matter both with regulators, but also with a representative of the banking industry. And it was very obvious, and you can read this basically everywhere now, that KYC is a burden, is a whole bunch of people and costs and everything involved there. The LEI can help to some degree because you would find information easier and quicker because we have the link to the authoritative sources and all of that. But it doesn't replace KYC procedures within banks because they are legally liable for the results. So they have to do this background check anyway. The LEI can help, right? And later on in the bank, the LEI can help streamlining processes. That was a very nice study from McKinsey just in 2019, where they claim that the savings in the banks alone could be 2 to 4 billion a year if the LEI would be applied everywhere. But the cost side and the process side is just one side of the equation. The other thing that we figured is that the banks have struggled with their clients. So the bank must report a client relationship using the LEI of the client. So the bank has to go to the client and tell them, please give me your LEI. And then the client says, no, I don't have one. And then the bank says, please go and get one. And then the client says, I don't want to. And then the bank says, I can't do business with you any longer if you don't have an LEI. And then the client says, okay, I'll find another bank who does it. Can you imagine how that feels for front office? You want to serve your client in the best way, and you have this roadblock in the way. So why not turning this weakness into a advantage. The banks could become involved in the issuance of the LEI. So the dialogue would be completely different. Bank to client, you would like to have this credit from us. Please sign this form. Oh, and by the way, check the mark that the bank is entitled to manage the LEI for you. And then the client can say, oh, fine, thank you. I don't have to do anything. Everything works. So from a client sensation point of view, it is very important that the banks engage with this from a service perspective. We believe it also helps client retention. And I mean, you're loyal to where you have your data, right? That's an old philosophy from the internet that applies here as well. So the banks have an enormous cost saving, compliance and all the other benefits associated, but also their clients can benefit from that. And then we can create network effects. Once the client have the LEI, oh, we would like to have a digital version of it as well for our business transaction. And that's how those two dots get connected. The banks becoming part of the infrastructure of creating LEIs, and then the LEI owners can use the LEI together with digital representations for their business transactions.
JP Morgan is just the first. I assume you're in discussions with other banks to follow a similar model with them. Is that right?
I would admit that we're pretty excited that the largest bank in the world joined us first. Yes, but we're also talking with others.
Well, a last question, Stephan. You've been doing some work with XBRL to embed digital certificates, digital fingerprints, if you like, into financial statements, so that the user of that document can be confident it's authentic. It's a clear outgrowth of all the work you've done so far. Now, what other areas of business life can that logic be extended to? One thought that occurred to me, for example, is corporate actions. A corporate action, the content of the document might change, the terms of the merger, for example, might be altered during the course of that the offer is open. And there's a clear advantage there in shareholders being able to be confident that the new offer actually genuinely does come from the purchasing company, for example. But that's one example. Is that an example you've thought about? And if so, what other examples might there be? Another thought occurred to me was shareholder identification requests under the Shareholder Rights Directive, where the company can issue a request to find out who the underlying shareholders behind nominee accounts are. It seems that this digital fingerprinting has multiple applications. What applications have you been thinking about at GLEIF?
Let's recap for a moment where we come from. For centuries, everything was on paper and signed with blue ink on white paper. But the data that is on paper cannot be used in computer programs. So you need a machine readable version of that data. And that's where the XBRL standard came in many, many years ago. We have been working with XBRL International right from the beginning to create a taxonomy and how to include the LEI and XBRL statements. And we're very, very happy that more and more regulators have picked this up. Europe, for instance, they have issued a rule that by 2021, all listed companies must file their annual reports in XBRL statement, so machine readable version, and they must include their LEI so that the link in the databases can be done. The question is then, how can you make sure if someone presents an XBRL file to you with data that nobody has tampered with it, that there are no fraudsters, injecting themselves, hackers, manipulating your information. And there are examples in the world, unfortunately, where this happened, where people broke into systems, falsified information to have a certain gain from that. Now, what you can do is, and that's exactly what we demonstrated in the example, I think that you're referring to, we said we can use the digital identity also to protect the document. We can sign the XBRL file with the digital identity. And by this way, we would create a trusted version of the file that can be then stored and taken to any other place. This was the first step, to make it digitally sound, cryptographically sound. But the second was that we added a signing process to that. So for instance, we created the XBRL version of the GLEIF annual report 2019, and I signed it with my digital certificate that this is the report coming from GLEIF. And I used a qualified EIDAS certificate. I'm a European citizen. I have my own EIDAS certificate, and I used that, given the current law, the signatory law, I used that to sign our annual report. Then I passed the report on to the chairman of the board, and the chairman of the board also signed it with the digital certificate, indicating that this is the approved annual report by the board. And then we passed it on to our auditors. And EY also signed it digitally and gave the attestation that these are the numbers that they have audited, that put their audit opinion about. So it's not just sealing and securing the content. You can also follow the signatory powers and the chain of the signatories there. And that creates a complete new array of applications. We use the annual report as an example, but think of any document signing, think of contracts, think of e-invoicing. You have similar issue, you know, content in e-invoices get often machine readable. In all of these use cases, the LEI embedded in a digital certificate can help, because then you can link the LEI from the digital certificate with the LEI in the file. And if they match, then you know it was the authoritative source coming from the signer that had the authority to sign in one go. Mm-hmm. And you can prove this computationally. You don't have any manual procedures necessarily anymore.
And if the content of the document changes, in my example, the terms of the corporate action, the merger offer change. In your example, you might have made a mistake in your annual report, put a minus sign where you meant a plus sign, for example. Does the digital certificate change automatically throughout the chain? It does?
No, the digital certificate does not change. What changes is the reference data in the LEI repository that we carry on our website. Uh-huh. But you raise a very good point. I would like to give my answer I'll give you two aspects, two sides of the same medal, if you like. On one hand, if people would file their ownership structure in annual reports, that's easy, you know. We have an example, a company like Nestle, food manufacturer, has X amount of subsidiaries all around the world. They could, in their consolidated statements, they could identify all of the subsidiaries with their LEIs. That's easy, right? Once you have that, you can build a parser to extract the information out of this XBRL file. So collecting ownership information could be automated. You don't have to do this manually any longer and things like that. So that's the one side why XBRL makes a lot of sense. But then reality is mergers and acquisition take place all over throughout the year. And that's why the regulators have put a policy together on what we call corporate events or legal entity events. Not all corporate actions are relevant for the LEI system. For instance, a dividend payment would not be of our concern, but other things like an acquisition, like retirement of a company, bankruptcy, whatever. And we're working in 2021, you know, based on this mandate by the regulators on incorporating corporate actions feeds into our global legal LEI system. And you could imagine this looks like the following. We get to know of a change, maybe an acquisition, through a third-party source. And then we go and challenge the registrant with the data and saying, dear registrant, please confirm that this merger and acquisition has taken place. And this way we close the loop from the third-party information that we get and the self-registration nature of our systems. And you have basically the four eyes looking at this. And this is part of our program that we're going to roll out in late 21, early 22.
Now, GLEIF is originally the creation of, you know, an international body, international regulators. As you've said, you rely upon national competent authorities to put into practice, you know, the products which you create, if you like. As you look forward and think about digital identities in particular, do you think that the international regulators, by which I mean the G20, the Financial Stability Board, the FATF, and so on, how well do you think they understand the case for digital identity? And in particular, do you think they have a role or are considering a role of accelerating the development of digital identities in the same way that they've pushed LEIs in the wake of the financial crisis?
One word about the organization GLEIF. We're a not-for-profit organization domiciled in Switzerland. And Switzerland was chosen by the regulators in order to make sure that none of the big political blocs could have influence on the decision making within GLEIF. But we are an offspring of the public sector, even though we're a private sector organization, but we're an offspring of the public sector. And that comes with limitations. For instance, we should not interfere with lawmaking. We should not do what you call usually lobbying work and things like that. The regulators had this vision in mind that we are an implementation arm of policy rather than a powerhouse for creating demand for new policy. That's one side of the medal. On the other side, these regulators are also highly interested in these topics because they learn from the markets that these things are coming, and digital identity is a major theme at the moment. So how we position ourselves is more like a go-to organization. If you have a question around identity for legal entities, come to GLEIF and we can help you. We want to be some kind of a think tank in that area. So we give people ideas and we say, look, this is how you could improve, for instance, security and trust in your reporting lines, right? But it's up to the regulators to make that call and to put it into writing. If this is going to happen, I don't know. But my experience over the last 6 years from our working relationship with both the public and the private sector side is good ideas make it into regulation. It sometimes take a little bit longer, but I would be very astonished if we wouldn't see further adoption of this in regulation. And I think the EIDAS regulation in Europe is the first very good example for that.
So if I said to you plainly, are international policymakers enthusiastic about digital identities, your answer would be yes. Is that right?
Very likely, but it's not our choice. It's not our choice. We cannot dictate things, but we can offer our help and we can educate and bring people together.
Stephan Wolf, thank you very much for taking the time to talk to us.
Dominic, my pleasure. Thank you very much for having me today.